Hey, Dustin Tibbetts here, financial advisor with Jazz Wealth Managers. How you doing out there? I'm doing great. I just had gummies, Airhead gummies. You ever had Airhead gummies? Man, feeling pretty good. Hey, I want to talk to you guys about something that clients ask this question a lot. See, we're one of the only financial advisors that actually manages our own portfolios. We don't go buy mutual funds and things like that. Our background is actually building our own portfolios. So the markets, I don't know if you've seen, but the markets have had a really horrible pullback. And I get a lot of emails from clients that go, why don't we rebalance? Or should I rebalance in my 401k? Well, the answer is no, this is a horrible time, right? If you're watching as of now, it's what, June something, late June. So we don't want to rebalance during periods of volatility. And today I hope to explain why that is. In general, rebalancing, let's say you have a portfolio of positions, and you've got this one, right? Well, when the market starts to sell off or has a really good run or something like that, your allocation, let's say you wanted to put 20% in this one, 20 in this one, and so on and so on and so on, which would leave us, get rid of that. What happens is inevitably, here's a position that goes this way, this one goes this way, this one falls apart, this one falls a little bit, this one falls, right? So you've got performance that's all over the place. But yet you had 20% in the portfolio or in this position. So inevitably this turns into now being 22% of your portfolio. This turns into being maybe 15, 16%, right? And rebalancing is just simply saying sell to bring this back to 20 and then buy to bring this back to 20, right? Just bringing it back within line there. Inevitably people want to do this during big drawdowns. Very normal, because when you look, especially those of you that build your own portfolios on, M1 or the other ones or whatever, you've got these positions that you had set aside 5%, 10%, whatever it is, but now you look at it and you're seeing 6, 13, 2, because this big move in the stock market. So you say, well, let's rebalance. Horrible idea. The reason is, especially during this downturn here, you have most everything, there's nowhere to hide, right? The market's basically just selling off, pulling your stocks along with it. Well, if you had, let's say, 15% in each one of these, right? You go, all right, 15%, all right, so on. Well, this has fallen maybe down to a point where it's 7%, this is 9%, this is maybe 11%, right? And up here, this is getting weaker too. But the problem is when you rebalance, if you take from positions that are doing really well, not like going up, but they're doing well, holding up with the market, and you rebalance, where is that money going to go? It's going to go to this to bring it back to 15. Well, this position is falling like a rock. That's why it's so far outside of your allocation or your target allocation. So what happens is, you think you're rebalancing, but inevitably what you're doing is taking profits in good positions that have held up, and you're putting it in really poor positions, or at the very least, you're putting it in positions that have sold off much faster, right? In the long run, that may be a good idea, but in the short term, what you've done is created more volatility in your portfolio than you had before, right? Hope that makes sense. So in this type of market, the way things are going now, you're doing that to yourself. You don't know it, right? And the next thing you know, you're like, why is my whole portfolio moving so fast to the downside? The market fell 4% and I used to only fall like 2%. Now I'm falling 4%. What's going on? Well, it's because everything's moving lower and you took from something that was holding itself up nicely, you sold some of that and bought some of the stuff that was in really bad shape. So the rule is, yes, you want to rebalance after large moves in the market, because you're going to be off. You're going to have to at some point. But you don't do it during large moves in the market, right? Let everything settle down. Let the world calm down. Watch the volatility index if you want. When that thing starts to compress and get calm again, all right, then let's rebalance. That means that those really weak stocks down there likely have been beaten to death. They're done getting beat up. They're against the mat. They're not going anywhere, right? So if you're wondering, like in your 401k or IRA, your accounts here or wherever else, if you should be rebalancing, right now the answer is no, don't. Maybe get your plan together, see what you want to keep, things like that, but don't actually pull the trigger to rebalance right now, or you will inevitably create a faster, more volatile portfolio. And it's tough to do, right? Because I know you want to. Everybody's out there and sees they want to do it, but that's the reason why you wouldn't do it. So I hope that was a simple explanation. If not, we'll try it again sometime, but appreciate you guys watching in the meantime. Hit the subscribe button, and if you want to check us out at jazzwealth.com, well, that's the website, actually. So thanks.
Hey, you made it to the end. That's awesome. Well, if you want to check out more geeky stuff, be sure to check out that video over there. Also, if you could subscribe, that really help us out. We're financial advisors that love to teach, and you'll find all kinds of free stuff on our videos. And remember, keep your dough straight. Yeah, I did it. You did. That was it.